Hello and welcome to Growth of Economics, the Cave of Knowledge. I am Dr. Bauer. First of all, let me just say a big thank you to all those who have watched my videos and have commented and have subscribed and have shared those videos. I am extremely grateful. Now, since Christmas is fast approaching, we decided to convince Santa to come out of his grotto to give some kind of good news to our listeners and our viewers. Now, the Bank of England met 2 weeks ago and decided to leave interest rates unchanged. So, in this episode of Growth of Economics, we want to look at what that means. If you do enjoy this video, please like it, share, comment, and then do subscribe. A big shout out to Namha and all your mates. This video is actually dedicated to you, and I believe that you will make the most out of it. So let's get into what we have today. So what is the Bank of England interest rate? It is the interest rate at which the Bank of England lends to other commercial banks. The interest rate at which the Bank of England lends to other commercial banks. Therefore, it is the interest rate that commercial banks must use as the basis to set their savings and borrowing interest rates for their customers. That is why it is also known as the base rate. The base rate. So the interest rates that are normally set by central banks, okay, are referred to as the base rates. Okay, so the Monetary Policy Committee of the Bank of England, that's BOE. So the group in the Bank of England that sets the interest rates, that group is referred to as the Monetary Policy Committee, that's the MPC. And they meet in the penultimate Thursday of every month to set the nation's interest rate. Now, when they meet, they have one of three options. They can choose to increase interest rates, decrease interest rates, or leave interest rates unchanged. And their decision will be based on the state of the economy, the current state of the economy. Now, when they met on the 21st of September 2023, that is 2 weeks ago, the members voted 5-4 to leave interest rates unchanged at, wait for it, 5.25%. 5.25%. So what does this decision mean? What does it mean for you and I? Number one, it means inflation is falling. Number two, borrowers have a respite. Three, the gains of savers have paused. And four, the economy is likely to expand. So let's take a look at the inflation rate falling. From October 2021 to October 2022, the inflation rate was 11.1%. From July 2022 to July 2023, the inflation rate was 6.8%. And from August 2022 to August 2023, the inflation rate was 6.7%. So we can see the inflation rate falling over the past few months, according to the Office for National Statistics, ONS. Now we can see this chart from the ONS, okay, that is showing inflation rates, that's headline inflation and core inflation. So core inflation is the type of inflation that does not take into account energy, food, tobacco, and alcohol prices. Yeah. So we can see that in 2019, yeah, the inflation rate was around just around 2%. And at the height of the pandemic, inflation rate fell to around just 1%. And as we began to emerge from the pandemic, due to supply bottlenecks and shortages of raw materials, the inflation rate rose to over 10%. And in 2021, when the Bank of England started increasing interest rates, the contraction that has been happening in the economy has succeeded in causing the inflation rate to fall. And currently, the headline inflation is 6.7%, whilst core inflation is around 6.2%. So there is evidence that the inflation rate is actually falling. Okay, so now borrowers have a respite. So compared to December 2021, people on tracker mortgages are now paying on average £540 more a month. Tracker mortgages, that is mortgages that track the Bank of England interest rates. Yeah, and those on standard variable rates are also paying £299 more a month. So therefore, the more than 1.4 million people on tracker mortgages and standard variable rate mortgages have a respite. In other words, the squeeze on their disposable income has stopped. Yeah, so they can have a bit of confidence. That is according to the BBC News. Yeah, so borrowers have a respite. What about the gains of savers? So the gains of savers have paused. Okay, savings rate was as low as 0.5% for many years until December 2021. So now average savings rate is around 4.5%. It's around 4.5%, according to tradingeconomics.com. So with this current decision of the MPC to hold interest rates, it shows that the gains of savers have paused. Now, that means that there is no likelihood in the future, at least for now, that uh, um, the interest rates that the savers get on their savings is going to be increased. For now, it is stagnant. That is the conclusion we are making here. Um, Now, the economy will expand. So, borrowers may be encouraged to spend. So, the confidence that borrowers have that there won't be any further dent in their incomes, that kind of confidence will cause them to begin to spend a bit more money, okay, a bit more money. And when that money enters into the economy, it is likely to cause the economy to expand. Savers may also be incentivized to spend. So if savers come to understand that, oh, okay, the earnings or the interest rate that they were being given, that interest rate is not going to increase is not going to increase further, then they may not have the incentive to put any money away. So that extra money that they would have saved, they may just decide to spend it. Businesses may resume investment activities if the cost of borrowing is stagnant or doesn't increase further. That shows that is an indication to businesses that cost of investment is not rising or is not as high as they were expecting, and that will encourage them to embark on investment activities that they had in mind or that they had put on hold. Okay. So, what are our conclusions? Number one, so the Bank of England feels the inflation rate is now under control. That is the feeling right now among the MPC. Their decision may be counterproductive because it may inadvertently expand the economy. Because if people become gain some kind of confidence because of the pause on interest rate rises, then they may decide to spend as we've already identified, and that can um, expand the economy that we live in. Nevertheless, this is just a one-time decision. They have not indicated that the rate will not rise in the future. So they haven't given any indication that the rate will not rise. They will not rise. So um, we shouldn't be overconfident. Otherwise, any kind of confidence will be premature. For the time being, at least, rates are quite high relative to the recent past, and will therefore certainly help curb inflation in the UK. So for the time being, at least, the interest rates are quite high relative to the recent past and will certainly help curb inflation. Okay, so that is the end of this presentation. I hope this is some kind of good news that Santa has brought from his grotto. Hopefully, as Christmas approaches, Santa will bring more interesting topics in economics, some of which may be extremely good news. So thank you so much for watching. Please do subscribe to Growth of Economics for more interesting topics in economics. Thank you and enjoy your week and your days ahead until Christmas comes. Thank you so much. Bye.